Hey, what's up? This is Zach here. Super excited to be speaking with the head of product at Dynamic, Adam. Before we get into things, how are you doing today?
I'm doing great. It's been an incredible day today. We covered a lot at this event, really kind of participating across the entire spectrum of stablecoin conversations. Really dug into sort of both the technology, but also the practical application of stablecoins, which in general just gets me super excited. The more people who understand how to use this technology, the more we can reduce the barrier for entry and actually kind of see this application or see this value really being used everywhere. So it's been a great day.
And for those who don't know, can you tell us a little bit about Dynamic? And I want to say it's very cool to speak to someone actually building on the product, because that is a very unique perspective. Usually we don't hear from those folks as much. So that's amazing.
Absolutely. So Dynamic you can think of as a single SDK for all wallet interactions. Really what we think about is how do you remove the complexity of crypto away from businesses, developers, and users, right? So everything should feel like you're building sort of a Stripe-like experience for developers where it's top-notch, right? Everything should just work and should be really, really simple. And for end users and businesses, it should feel like the regular internet, right? So that means when you create a wallet behind the scenes, the user should just be logging in with an email and it works magically. Similarly, if you are a developer thinking about how do you move money between point A and point B, and allowing your users to take advantage of those sort of unique cases, such as getting yield or maybe issuing a card, that experience should also feel as seamless as it would be as if you went to a Venmo account, right? It should just work. And that's really what we focus on Dynamic. So a single SDK for all wallet interactions.
And why do you think it's taken us so long to sort of get to this point now where people are thinking of it like, how can we make Venmo, how can we make it easy?
Yeah, right. So if you think about sort of the traditional World Wide Web, building on it started, call it like in the 70s and the 80s, and took off really in sort of the 90s and the .com. And those use cases that were being built were actually kind of weird and kind of crazy, and its barrier of entry was really, really high. You needed to understand HTTP, you needed to understand a lot of the underlying code in order to use it. And then you had a massive influx of capital in which people got really excited in the .com boom, and then it all blew up. And then suddenly it started to take off, right? Companies who started to abstract a lot of that crazy complexity of the early internet really started to unlock a lot of the value that nowadays we sort of just take for granted. It just sort of works. And that's a similar thing that's inherently happened with crypto, right? People had been talking about sort of permissionless exchange of value in Bitcoin for many, many years now. I think we're at year 10. And inherently, you need infrastructure companies and you need these early app use cases to be able to create some type of use case for them. Now, those use cases were likely, and they were, very complicated to use. That didn't mean that this technology is defunct. It just means that we were early. So you had lots of people hopping in, lots of people trading, lots of people, unfortunately, doing not so great things with the technology. And it was really, really hard to use. And now we're inherently moving into this new phase where the infrastructure companies that are actually realize that doing things really the hard way is not going to actually allow us to proliferate. So just as traditional internet technology had that sort of rise, bust, and now growth, that's really the phase that we really feel like we are in. This phase in which now applications that abstract the crypto is actually going to really accelerate mass adoption. So it's not so much that this is really a new case, but really a tale of another technology, right? Where were you when early internet protocols were created? You probably weren't born, or maybe you weren't really playing with it. Where were you with crypto when it was started? Probably in a similar place. You were born, but you really weren't using it. You need a boom, you need a bust.
And where does stablecoins come into this picture in terms of accessibility and growth and what you guys are doing at Dynamic?
So stablecoins really started to take off maybe in 2021. So essentially backed stablecoins, but also algorithmically backed stablecoins. And then it also blew up, right? And then it sort of went dark. But the inherent properties of stablecoins have remained, which is that you could be able to move money efficiently for businesses instantly, save people money, as well as allow users to take advantage of opportunities that are not going to reduce the value of their currency overnight, right? They'd be able to hold the value in what they have. And where Dynamic really thinks about it is in a world in which businesses are going to be creating merchant wallets, they're going to be creating situations with merchants, businesses globally are going to want to take advantage of this shared value, the value of the dollar on the internet that won't drop in value. You need to be able to provide a technology stack that can help facilitate that, right? So while we didn't create the underlying stablecoin, Circle and others did, we really believe that we can provide the core account rails that will allow businesses to be able to build on top of those use cases, right? So they'll be able to create a global Venmo overnight, an application, an entrepreneurial person, or they might be able to create these merchant accounts for all of their businesses in Africa, in Latin America, and those businesses would be able to take advantage of the digital dollar while using dynamic behind the scenes, using the wallet infrastructure that just works.
And when you talk about sort of those like use cases, there's some that you've kind of seen that you're really excited about that are building on Dynamic?
I think there's really 3 use cases that we see basically every day. We see the idea of creator economies. So this idea of like B2B setups in which the end person, the end business is looking to get paid for services that they do, right? So you can imagine there are entrepreneurs or contractors or creatives all across Latin America who are providing services on behalf of US-based companies. And they themselves are wanting to get paid. Well, those people want to get paid in a currency that's going to retain. They want to get paid instantly. They are inherently the creators, right? This idea of a creator economy. And this is really where blockchain and stables really meet that need, right? Instead of needing to go through 3 different intermediaries, sending payment that's going to take forever, land in sort of this business or creator's account, and then instantly be devalued. This is actually where you can use stablecoins and wallets to make that efficiency really come to life. So B2B kind of creator economies, or even B2B contractor payments is another way to say it. The second use case really we see is the growth of, call it neobanks. Neobanks being, if you're in Brazil, you're in Argentina, you're in a different country, and you actually want to create a hybrid application that would be able to handle everything from loan servicing, payouts, earning, card issuance, and you're building for a digitally native audience, right? You're building for a world in which people show up. They don't want to go to necessarily a bank. They want to go to a new bank. They want to go to a bank that actually has everything all encompassing. So as a neobank, you're asking yourself, okay, great. What is the tech stack that's going to allow me to be able to blend sort of hybrid payments or hybrid sort of fiat services and new generation crypto and stable services? Because my customers really want to get access to all of those things in one product, right? So we see a massive growth in neobanks wanting to stitch together sort of their fiat payment rails, their fiat services, and stablecoin services, because that's what users in their market are asking. Lastly, the third use case really we see is the explosion of either remittances as well as, really we see this as like remittances as a major use case. Put it in a nutshell, right? You're in the United States, you want to pay a family member who is in another country. Today, wildly complicated regulatory uncertainty. And again, as soon as you send the money, if you send $1, let's say to Mexico, your family member might only be receiving 80% of it, 60%.
Crazy.
Which is crazy.
And you don't even know that sometimes until you sent it.
Exactly. So the existing systems really fail to deliver on that promise of being able to send home your hard-earned cash to your family members. So this is where we see remittance use cases as being significant, really huge, right? If you can deliver a larger percentage of that dollar to the family, then more people will actually use it. People want to be able to send home what they've spent their lifetime building and working. So remittance corridors and how you can move money across borders is one of the biggest use cases that we see.
When we look at kind of those remittance corridors, where in the world are you guys seeing the most adoption?
Yeah, so we see a lot in Latin America, right? So if you look at Brazil, Argentina, those are really major pockets, as well as in Mexico, for sure. Sometimes in Colombia as well. The other side of it definitely is into Africa, as sort of Western Africa, Southern Africa as being sort of major areas as well. The biggest sort of the biggest corridor that really hasn't yet exploded, surprisingly, is actually through India, US to India. There's a whole mess of reasons as to why that hasn't really been unlocked, from a regulatory reason, for technology reasons, off-ramps, and a slew of other reasons. Interestingly, that is probably where things will go. But to answer your question today, mostly in countries within Latin America and in Africa.
What do you think the biggest misconception around stablecoin adoption is?
Stablecoins, like many things in crypto, suffer from a lot of conversations about the technology, a lot of conversations about how you can use it in a different way, and not just focusing on it'll be $1 in your account and it should act and behave like $1, or it should act and behave like a real, it should act and behave like a peso. So I think the biggest misconception is one in which too many people are talking about all of the different inner workings of it, and therefore set people back, right? It's almost like overcomplicating the problem and not just focusing on sort of the very base cases, which is you can have $1 in your account and it'll act like $1 on the internet. That's basically, if that helps answer your question.
No, 100%. And when we kind of look at like events like today, what made you guys kind of want to participate in this, and, tell us a little bit about that, because everyone's been having a great time.
Absolutely.
To talk to.
Inherently, it comes down to this reality, which is like, there is people who really believe in stablecoins and the value, and that's massively growing. But how to use it, what technology stack to use, how does it all come together? That's a massive unknown to a lot of people. People say, I want to use stablecoins, I just don't know how to use it. So we thought this would be a great opportunity to sort of bridge that divide. Okay, how can we provide clarity to people who really, really want to use this tech in a forum that we can bring experts and good speakers as a way to reduce that burden on businesses and create clarity for everyone.
As we kind of get more and more virtual, obviously everything is usually on Google Meets now, Zoom, and all of that kind of stuff. What keeps bringing us back to these in real life events?
Yeah, absolutely. In real life events still are a place where you can have really deep, meaningful, like, conversations in a way that sometimes digital events sort of don't really, I would argue, allow for. A lot of business still requires you to go deep and have a face-to-face relationship with someone. And people yearn for those relationships, especially when it comes to money in their business. I definitely see a world in which obviously remote first digital events are huge. But as you can tell, when you have these in-person events, there is a deep yearning for that physical connection, so that when they trust you with their money, or you're involved in the tech stack that's all about people's financial well-being, you have a personal relationship before you start to embark in your endeavor. So I definitely see there being kind of an explosion, of course, of information digitally, but that yearning of coming together is not really going to go away.
I agree.
People really want to connect and get into the weeds together before they sign up for maybe creating the next great use case of the future.
So as you're kind of building a dynamic in your role as head of product, do you see other kind of competitors out there that are trying to kind of do the same thing as you guys? Or would you say you're more of a first mover in this space?
No, so like any great idea, there are a lot of people who want to share of the pie. And we do see competitors that had been here, maybe even building in 2021 or started around a similar time to Dynamic. To be honest, we don't really think about our competitors every single day. We understand what they do. We understand sort of where they're focused on, but we really focus on what we can deliver and what we can control. And in general, in this space, we actually need to bring more developers into the ecosystem, right? So inherently, having more competitors, that might keep me up at night, but actually if they're able to onboard more developers and more users into this ecosystem, we will be able to grow the pie together. So there are a lot of great companies building here. I don't think about them honestly every day, but if they're able to bring more developers and more users into this space, then the more the merrier. Let's grow the pie together.
Why do you think crypto and, stablecoins has just gone so mainstream? Because there's been so much, we talk about the collapse and it's come back, but now it really seems to be taking off. What do you think is causing that?
Yeah, so I actually don't know if we're really taking off yet. I think in a different way. I say it like this. I think that we are taking off through the lens of businesses starting to care again, but at least consumers in the United States, they're buying Bitcoin, they're buying digital assets, but have they really bought in yet to being able to use it broadly?
There's not the retail use case.
The retail use case really isn't there quite yet. I believe this will come as more businesses really start to proliferate. So what I'm really seeing is business proliferation, like business interest is happening now. And over the next sort of 24 months, businesses are going to create that retail experience. Businesses are going to drive the adoption that you're going to see in the United States, unlike in previous cycles. Previous cycles were go to an exchange, buy Bitcoin, buy ETH, earn yield. And while that is definitely going to grow in the US through the ad campaigns that you have of centralized exchanges, I actually think this cycle is going to go business-led first, and then it's going to become more mainstream. That at least in the United States. Outside of the US, I think it really depends on which pocket you're in. So in Asia, I think there is more receptivity to being able to buy other currencies and be able to earn and do other more unique things. And in those cases, I don't really think it actually went away that much. I actually think it just sort of went a little quiet simply because the US media machine sort of stopped talking about it. And there it will just continue to kind of go in a fervent and wild way. And in Latin America, I think it really depends. I actually think a lot of it will be business-led experiences and consumer-based apps that hopefully over time will take off. But businesses, I think, will fuel sort of the next growth in sort of the excitement around stables and crypto in the next 24 months.
When we look at that business and that retail experience, what do you think are the main benefits for them? And do you see a world where once you deposit your fiat into stables, you can completely live throughout your day-to-day within stablecoins in a retail experience? Do you think that's realistic?
Not yet. So realistically, not yet. And this is where like new apps, new neobanks that can connect and stitch to different like local like discounts or local grocery stores are still really needed to be delivered if you're going to be able to get stables, stay in stables, and interact. I don't think we're there yet. I still think what you're going to see is people are going to get digital dollars, put it into cash, and start to spend it. But then over time, really start to stay on stables and start to interact with cards, start to interact in groceries. But transparently, that world is not yet fully baked today. So I think that's sort of a growth plan for the industry. But today, I don't think it's fully operational.
Do you think there will be a day where it is?
I think in general, it's going to be hybrid. I don't actually think of stablecoins as being a replacement for the traditional fiat economy. I think there will be worlds in which large percentage of your dollars will be considered digital dollars, and a large percentage will still be moved to your local currency. Simply put, because most businesses globally are not going to flip over to accepting digital payments. I actually think it's going to just naturally take some time. So I foresee a world in which it'll eat up a larger percentage, maybe, of a share of somebody's wallet and their accounts, but it won't be a full replacement. And there will be a world in which maybe it's 70-30, something along those lines, in which 70% of your assets are digital assets, 30% of your assets are still using sort of like your fiat rails, your fiat payments. But that's a number of years away.
Agreed. Honestly, I think we're building there, but the consumers and the businesses still need to have alignment on the goals and why they would do that, incentives.
Exactly.
It's not quite there yet.
Correct.
When we're kind of looking at, this event here today, obviously we had a lot of fantastic panels. Was there any kind of insights that you gained that you wanted to share with our audience for listening to these speakers and engaging with your, our peers here?
Yeah, I actually, for me, there was a great discussion at the end that talked about sort of AI and crypto. And I actually agreed a lot with the panelists there. What they were basically saying is that crypto and AI are seemingly like running on their own tracks. Like AI and crypto haven't really combined yet.
And when you say it, people think you're just buzzwording.
Yeah, right? Like, totally. And what I appreciate on that panel was that Do I think agents are going to instantly start sending USDC at scale? I actually don't think that's a great way to start. I think that's really interesting, and maybe we get there. But I actually would like to see more exchanges, more crypto companies start using AI as a way to de-risk themselves, as a way to look through the accounts and wallets that they're interacting with, using sort of the unstructured, beautiful data of blockchain as a way to create the insights for their business. Then maybe before they just go ham and say, here's an agent that's going to take dollars and send it everywhere on your behalf. I actually think that was a really fascinating insight. Why can't AI use the beautiful unstructured data that blockchain creates and create valuable insights for businesses, and that as the means to sort of bring them into the land of kind of money movements?
I think that's a really fascinating use case too. And I agree with you. I mean, I think we have to focus more on those practical use cases that have more immediate needs versus just what sounds cool.
Yeah, I would hope that more businesses will, as they adopt sort of with bill pay, they adopt sort of a combination of fiat rails and crypto rails. What I really hope to see is that they're using LLMs, they're using AI as a way to understand their entire bill payment ecosystem, and not just saying, okay, for crypto, I need crypto and AI. For this part of my business, I need another sector and AI. Actually, you should be looking at this as like a holistic problem in which AI or LLMs can be used to help solve the overall problem that you have around risk, bill discrepancies, and incorporate that as part of their products.
Awesome. Well, I just want to say thank you so much for the fantastic interview.
Cool.
I encourage everyone to follow Dynamic on X and definitely keep up with the work that they're doing there. It's
cool.
honestly really interesting. So thank you
so
so
much.
much.